Alright, good afternoon traders. This is your free video update from Seasonal Swing Trader. Today is Thursday, May 9th, 2019. And we're often aware of the seasonal patterns and cycles that exist in the stock, commodity, bond, and currency markets, but we also know that seasonality exists in the real estate market. So we're all familiar with the sell may go away in connection with stocks, but perhaps you may not realize that now is also a suitable month. But you may also not realize that May is a suitable month for initiating real estate sales if you're participating in the real estate market. So that means if you are a buyer in the real estate market, you're probably going to be looking to paying higher prices. If you are a seller, you can command a little bit higher price for the particular property that you are trying to liquidate. Why is that? It simply has to do with temperatures and the weather pattern, similar to how weather can affect other commodity markets such as grains, softs, and livestock. In summertime, temperatures are higher. In the winter season, they are lower. So the seasonal trend in home prices is correlated with higher prices in the summer due to warmer temperatures, longer hours, and lower prices in the wintertime due to limited hours of the day and darkness. So what does that have to do with what we're looking at today? The SPDR Real Estate Index ETF. So as if we were expecting higher prices at this time in the physical real estate market, you would expect to see higher prices in the related ETFs. Well, we did get higher prices going all the way through April. We typically would expect to see higher prices going all the way through May, June, and even into July before those prices start to taper off. But when we go to the ETF sector, this could be indeed telling us that real estate prices may be cooling off, or even potentially a broader effect, meaning that the overall broader market indices could be pulling back. Now, as of today, we had a very substantial pullback in the equity markets. We've since reversed intraday, trading well off its lows, but we still have a lot of time left in the trading session. So looking at a bigger picture, longer term perspective, we've got a couple of distinct patterns forming in XLRE. So perhaps this is a seasonal top. Perhaps we may reverse and go to the upside. Regardless, we have to respect high probability technical patterns. And so we're looking at a 1, 2, 3 top, looking at a potential 1, 2, 3 top on breaks below 34.85. We also have a very high probability head and shoulders topping pattern forming at these levels. So here we have essentially our neckline. Here's our left shoulder, a neckline, a head, neckline, and our right shoulder. So we'll be looking to take short positions down here below 35. Now, the way we measure our target is from the head to the neckline. So we'll call that $37 down to 35. That's a $2 profit objective. So we measure that down from 35. It takes us right down here to 33. We take a simple Fibonacci retracement level from this last swing low to this current swing high. Notice that that puts us right here at the ever important 50% retracement level. So if the market looks to roll over, which it looks like it is by means of lower highs, we'll look to short this market below 35. So that's what we mean when we like to put probabilities on our side. We've got bearish seasonality for the broader market indices, which would in fact drag down the real estate sector along with other sectors. We've got two high probability technical patterns in the head and shoulders top pattern and the 1, 2, 3. And we also have momentum divergence off the daily chart of this sector. So put that idea on your radar. Hope it helps, and we'll see you on the next update.